Welcome everybody, and today we will revise residential status. Very smart, important and really interesting chapter. So are you all ready? This chapter actually talks about two things. One, where do you stay? Basically for individuals, where do you stay? Right? Your residence. And second thing is from where you are earning the income. Right? These are the two things which are important for government to decide that what income of yours should be taxed and what income of yours should not be taxed. Think about me, Ganesh Narvade, earning classes, earning income by selling online tax lectures. Right? For me, I am staying in India and earning income from India. So government will say, hey Ganesh, whatever you are earning on that, please pay tax to us. Suppose I sell some ACCA courses, CPA courses, CFA courses outside India and earn lot of money in dollars, euros, pounds and all, then government will say, okay Ganesh, you are resident, you are staying in India, right? So on your global income, right, your income from euros, dollars or all should be considered while computing your taxable income, and on that you need to pay tax. I say okay to government. But if suppose government goes to Donald Trump and says, hey Trump, you have to pay tax in India, then Donald Trump says in return that I don't stay in India, so why should I pay? He will not pay. So where do you stay decides whether your income is taxable or not. Second thing, suppose if Donald Trump is doing some business in India, he understands that the future of the world is India. So there is great potential in India. He set up some business in India and he started earning in India. Then Narendra Modi ji says, Ab Donald ji, kaha jaoge? You are earning income in India, please pay tax on that. Then Donald Trump has to pay tax because where he earned the income? In India. So where do you stay and from where you earn income, these two matters a lot. On this basis this chapter is okay. So residential status, when we talk about, actually we categorize assessees into two parts. One is individual and HUF and second one is all other assessees. So let's talk about individual assessee and HUF assessee first. They are divided into two parts. One is resident, second one is non-resident. If they are non-resident, nothing to talk about further. But if they are resident, then are they ordinarily resident or are they not ordinarily resident? We have to check. And on that basis, the taxation will be decided. Now, what all these terms mean, I'll discuss, don't worry. Okay. Now, what about other SSC? Who are they? Like partnership firm, company, AOP, BOI, artificial juridical person, local authority, all are called as other SSCs. For them, there is no much distinction. Simply, either they are resident or they are non-resident. That's it. Okay. So, this is what all the whole structure of residential status is. But let us discuss one after the other. So let's start with individual, right? You and me, right? Residential status of individual. What they are telling, that first you need to check basic conditions. Now, what are the basic conditions? First basic condition is you should stay in India for 182 days or more. So how many days? 182 days or more in the previous year. For our exams, previous year is 2022-23. So 1st April 2022 to 31st March 2023. In between, you should stay at least for 182 days or more. Then you will be called as resident. Okay, if you fail this basic condition 1, then you can check basic condition 2 also. Right? What is this basic conditions 2? It says you should stay in India for 60 days in the previous year. Our previous year is 2022-23. So at least 60 days in this previous year, and 365 days or more in 4 immediately preceding previous years, like 21-22, 2021, 19-20, 18-19. In these 4 years, right, you should at least stay in India for 365 days. So basic condition 2 talks about 2 criteria. One is 60 days in the previous year 22-23, and total of 365 days or more in 21-22, 2021, 19-20, 18-19. Out of these 4 years, total you should stay for 365 days or more. If you satisfy basic condition 2, then also you will become resident. But if you fail both the basic conditions, basic condition 1 and basic condition 2, both fail, then you are a non-resident. Now if you are a non-resident, that's it, nothing to think about further. But if you are a resident, then government says let us apply 2 more conditions. We call it as additional conditions. Now you all know that basic condition is defined in section 6 subsection 1, and additional conditions are mentioned under section 6 subsection 6. Okay. Now to decide you are ordinarily resident or not ordinarily resident, additional conditions are required. What are the additional conditions? First one, you must be resident in India for at least 2 years out of 10 preceding previous years. What I said? At least 2 years out of 10 preceding previous years. Now let me just make you understand. Here we will not check 2020 to 23. It is previous year. We have to check 10 preceding previous years. That means from 21-22 back 10 years you should calculate, and in that 10 years at least 2 years you should be resident. Now resident means you saw the basic condition 1, 2, right? You should satisfy that in at least 2 years to satisfy additional condition 1. Now at least 2 years out of 10 years. Which 10 years? 10 immediately preceding previous years. Second additional condition is that you should stay in India for 730 days or more in 7 preceding previous years, right? In 7 preceding previous years you should stay at least for how many days? 730 days in India or more than that. If you satisfy both the additional conditions, if you satisfy both the additional conditions, then you are treated as ordinarily resident. But if you fail both additional conditions or any one of the additional conditions, if you fail, then you are not ordinarily resident. That's it. You are not ordinarily resident. So now we understood about individual's residential status. Now to decide whether you are resident or non-resident, basic conditions are applied. How many basic conditions you should satisfy? Any one of the basic condition. So this is either A or B. But when you think about if the person is resident, then is it ordinarily resident, not ordinarily resident? To decide, additional conditions are applicable, and if you satisfy both additional conditions you become ordinarily resident. If you fail both or any one of the additional condition, then you are not ordinarily resident. That's it. Okay. Now let's try to understand that there are certain exceptions also. Exceptions to what? Basic conditions. So what they say, that for these people which we are going to discuss now, only basic condition 1 will apply and basic condition 2 will not apply, right? What is basic condition 1? Okay, 182 days or more in the previous year 2022-23. If you satisfy that, you are resident. If you fail, you are not resident. For whom this rule is applicable? For whom the second basic condition of 63-65 days rule doesn't apply? They are person leaving India permanently for employment. So if somebody is permanently leaving India or leaving India for long period, for them only basic condition 1 should be checked, okay, not the basic condition 2. Suppose there is a crew member of a Indian ship, or we can say foreign going vessel, right? Indian ship which is going outside India, right? For them there is a certificate called as continuous discharge certificate. What is the certificate? Continuous discharge certificate. Now they will enter one date, right, when they are boarding the ship, and when they are leaving the ship another date is there. So from the day when they enter in that certificate the date, and when the discharge date is there, during this period the persons who are a crew member of a ship are not treated as staying in India. Okay. Now again I am repeating for you. If suppose there is a crew member of a Indian ship, or we can say foreign going vessel, for them only basic condition 1 applies. If you stay in India for 182 days or more, you are resident, otherwise not. So how to check? So they are saying that if you are traveling outside India, then you will enter into a document called as continuous discharge certificate from date to date. During this period, you are not considered to be staying in India. That's it. All other days you are staying in India. Okay, normal rules will apply. Now, the third person. The third person is person of Indian origin visiting India. Like Lakshmi Nivas Mittal is there, Sundar Pichai is there. These people mostly stay in India, stay outside India, right? They stay outside India, but they may visit India, right? So we can say they are persons of Indian origin visiting India. Now for them, if the income from any source other than from foreign source, right, income from any source other than from foreign source is more than 15 lakhs rupees, more than how much? 15 lakhs rupees, then not only basic condition 1 is applicable, that is 182 days, but basic condition 2 is also applicable with modifications. What is it? They are saying that basic condition 2, rather than 60, let us apply 120. So what will happen? If somebody is a person of Indian origin, he is visiting India, or is the person who is a citizen of India visiting India, then if their income is more than 15 lakhs, right, income other than from foreign source is more than 15 lakhs, then what the government says? Simple, that we will apply basic condition 1 as usual, for everybody it is applicable, and also basic condition 2 but with some modifications, and that is 60 days in the 60 days in the previous year is replaced by 120 days. That means for these people it will be like stay in India for 120 days or more in the previous year 22-23, and 365 days or more in immediately for preceding previous years. That's it. Now if suppose their income other than from foreign source, I am talking about person of Indian origin, Indian citizen, they are visiting India, their income other than from foreign source is less than 15 lakhs, for them basic condition 1 only applies, basic condition 2 doesn't apply. Clear? Very good. Now to remove confusion, I am just simplifying you what is income other than from foreign source. Simply Indian income. Suppose income other than from foreign source. Income other than from foreign source means simply Indian income. Okay, that's it. Plus foreign income from business and profession, plus foreign income from business and profession which is controlled from India. So income other than from foreign source is equal to Indian income plus foreign business and professional income controlled from India. That's it. Okay. Now, till now everything is clear to you that there are three cases which I said, that person leaving India permanently for employment, a crew member of a foreign going vessel, and a person who is a citizen of India or a person of Indian origin visiting India, and their income other than from foreign source is less than 15 lakhs. Only basic condition 1 will apply, 2 is not at all applicable. But suppose if the person is an Indian citizen or a Indian person of Indian origin visiting India, and income other than from foreign source is more than 15 lakhs, not only basic condition 1 applies, but basic condition 2 applicable with certain modifications. That is, basic condition 2 60 is replaced by 120 days. That means you stay in the previous year for 120 days or more, and in 4 preceding previous years for 365 days or more. Now, to analyze this, what I did, I have drawn a chart. See, if somebody who is a Indian citizen or a person of Indian origin visiting India, if they stay in India for less than 120 days in the previous year 22-23, they are simply non-resident. But if they stay in India for 120 days to 182 days, 120 days to 182 days, then what to do? Simply they will be considered, okay, 120 days to 182 days. Then we should check in the 4 immediately preceding previous years, are they staying for 365 days or more? If the answer is yes, if their income other than from foreign source, right, is more than 15 lakhs, if the answer is yes, then they are resident. That's it. But here we will not check additional conditions. They are directly treated as not ordinarily resident. Without considering additional conditions, they are directly treated as not ordinarily resident. Okay, we are talking about Indian citizens, persons of Indian origin visiting India, right? If they are staying in India between 120 days to 182 days or less than 182 days, then if in the 4 preceding previous years they stay for 365 days or more, and their income other than from foreign source is more than 15 lakhs rupees, then they are treated as resident, but they are treated as not ordinarily resident only. Okay, now come to the third part. If they stay in India for 182 days or more, then they are obviously resident. For them basic condition 1 anyhow will apply. But they are ordinarily resident or not ordinarily resident, for that additional conditions will apply, and we will decide. If they stay in India for 2 years, they are resident in India out of 10 preceding previous years, and also they stay in India for 730 days or more in 7 immediately preceding previous years, they are ordinarily resident. If they don't satisfy any one of the any one or both the additional conditions, they are not ordinarily resident. That's it. Okay, now there are certain points to remember. Please remember the day when you are flying outside India, the day when you are coming to India, right? People may travel, right? So the day when they are going out of India, the day when they are coming into India, both the days they are considered to stay in India. Now staying in India means you may stay in Hyderabad, you may stay in Uttar Pradesh, right? Ayodhya, Kashi, Mathura, right? So you may stay in Mumbai. Any place is okay. Staying in India doesn't mean that you should stay in one place and do dhyanam. You can travel across country, no problem, right? And second point, they said that if you are staying in territorial waters of India up to 12 nautical miles, still you are treated as staying in India. They also said that it is not continuously you should stay in India for these many days, right? You stayed for 1 month, you went outside India for some time, then you came back to India. it's okay, you can stay in breaks, right? There are many people who do like that, right? Person of Indian origin, their parents are born in undivided India, or their grandparents may be born in undivided India. And what does undivided India means? India plus Pakistan plus Afghanistan plus Bangladesh plus Tibet, right? If I am little mistaken or I have forgotten something, excuse me, but whatever I said is absolutely right. If some more additions are to be done, yeah, you can do. India plus Pakistan plus Bangladesh plus Afghanistan plus Tibet, all are part of undivided India. Okay, now come to the next part. If suppose you are a Indian citizen having income other than from foreign source more than 15 lakhs, you are an Indian citizen and your income other than foreign source is more than 15 lakhs, and you are not taxed in any other country. You are not taxed in any other country. Maybe because you are not a resident in that country, maybe you don't have citizenship of that country, on that basis they did not tax, or maybe you are staying in tax haven countries. So such persons, individuals who are Indian citizens having more than 15 lakhs Indian income plus business income outside India, professional income outside India but controlled from India, right? And they are not paying tax in any other country because of domicile or because of citizenship. Then government of India says, welcome to India. You can contribute to the development of the nation. You are deemed to be resident under section 6 subsection 1A. Okay. So when you are resident, government directly said we will consider you as resident but not ordinarily resident. Government considers them as resident but not ordinarily resident. That's it. Okay. Now, so this is nice way, right? Many people are there who are some software developers or digital marketing consultants. They may travel every month to one country, 1 month in one country, second month in second country, and simply say we will not pay tax in any country. Government India says, no problem. I know you are Indian, you are super smart, but government is also smart. Please pay tax in India on your global income, especially Indian income plus foreign income controlled from India. On this, definitely government will collect. Now come to the next thing, residential status of HUF section 6 subsection 2. What it talks about? Hey, directly here we should see control and management. HUF means Hindu undivided family. Control and management, from where the decisions are taken. If the decisions are taken partly, okay, fully from India, resident, HUF is resident. If it is partly India, partly outside India, then also HUF is resident. If it is fully outside India, then HUF is non-resident. So if decisions are taken from fully outside India, HUF is non-resident. But if decisions are taken partly from India, partly outside India, or totally from India, then HUF is resident. Okay. If HUF is resident, then let us divide it into two parts, right? Ordinarily resident or not ordinarily resident. How to decide? अरे यार, same individual rules, additional conditions. अरे इंडिविजुअल के लिए क्या थे एडिशनल कंडीशंस? याद है व्हाट आर दे? चलो, 2 years you should be resident out of 10 preceding previous years. Second one, you should stay in India for 730 days or more in 7 preceding previous years, right? And these are two conditions covered under section 6 subsection 6. If these two karta satisfies, then we can say he is, or HUF is ordinarily resident. Now conditions should be satisfied by karta, but HUF becomes ordinarily resident. Okay. Now, if any one of the additional conditions or both additional conditions are failed by karta, then HUF becomes not ordinarily resident. Okay. Now come to section 6 subsection 3, residential status of company. If the company is an Indian company means registered in India. So if the company is registered in India, we can say it is an Indian company. Then Indian company is always a resident. Indian company is always a resident. That's it. Nothing more than that to think about. But if it is a foreign company, right? What is foreign company? Company registered outside India but having a place of business in India. Company registered outside India but having a place of business in India. Right? For your understanding, I'll tell you that Google's company name is Alphabet actually. That company is outside India, registered outside India, but has place of business in India, yes or no? Yes. In that case, we can say Alphabet is a foreign company. Right? And for foreign companies, we will check poem. I am not going to school and singing the poems, right? Poem is place of effective management. So if poem is in India, then it is resident. If poem is outside India, it is non-resident. So I am talking about foreign company. Poem, place of effective management is in India, then it is resident, and foreign company's poem is outside India, it is non-resident. Okay. Now how to decide place of effective management? Where most of the board of directors meeting happen, where the company's total salaries you check, if they are paying more than half the salaries in India, if more than half the employees are in India, more than half the assets of the company are in India, right? The board decisions are taken in India. So like this there are many criteria which we don't need to study, but still general knowledge के लिए बोल दिया. Right? If place of effective management is in India, we can say the foreign company is resident. If place of effective management is not in India, then foreign company is non-resident. And you all know Indian company registered in India is always resident, don't need to check any conditions. Right? Next thing. Let us come to, oh wait. What about ordinarily resident and not ordinarily resident? For companies, there is no such concept of ordinarily resident or not ordinarily resident. Any SSC which we are going to discuss, whether it is company, partnership firm, AOP, BOI, local authority, AJP, there is no ordinarily, not ordinarily as such. Right? Ordinarily, not ordinarily is only for individual and HUF. Okay. Chalo, come to section 6 subsection 4. It's talking about partnership firm, AOP, BOI, local authority, AJP. That's it. If control and management is totally in India, resident. Partly in India, partly outside India, resident. But if it is totally outside India, then it is non-resident. Okay. Then it is non-resident. So are you able to understand what I said? With this, residential status related part is completed. Now let us discuss about scope of total income. Now here also again two categories, individual and HUF and all other SSCs. Suppose individual and HUF is there, the income is Indian income, then obviously Indian income is taxable to all the SSCs, whether he is an ordinary resident, whether he is not ordinarily resident, whether he is non-resident, Indian income is taxable to all. But if suppose foreign income is there, then what to do? Then we should categorize foreign income into two parts. Whether business and profession is controlled from India, suppose foreign income from business is there, but that business is controlled from India, then such income outside India is taxable to ordinarily resident and also not ordinarily resident. But this income, that is foreign income from businesses outside India but controlled from India, is not taxable to non-resident. Okay. What about other foreign incomes? They are taxable to ordinarily resident but not taxable to not ordinarily resident and non-resident. Okay, that's it. Clear? Koi doubt? No doubt. Chalo. Again, I am repeating for individual and HUF. Remember, Indian income is taxable in all cases. Foreign income is divided into two parts, right? Foreign income, they simply said that is it a business or professional income controlled from India? The answer is yes. Then such income is taxable to ordinarily resident and not ordinarily resident, but not taxable to non-resident. But if it is other foreign income which is not this part, then like not from business and profession controlled from India, then it is taxable only to ordinarily resident but not taxable to non-ordinarily resident and non-resident. Now come to other SSCs, right? Like companies are there, partnership firms are there, AOP, BOI, local authority and artificial juridical person. Indian income is taxable to or resident and non-resident both, right? Indian income is taxable to resident and non-resident, but foreign income is taxable to only resident. Foreign income is taxable to only resident but not taxable to non-resident. Very good. You may be thinking about a small thing that, sir, you said Indian income, you said foreign income, but what is the meaning of these two words, right? The words are very simple, right? Indian income, foreign income, very easy language. But there is a definition here. Indian income is income which is either received in India or which is either accrued in India. So any one or both are satisfied, then we can say it is Indian income. Suppose I am collecting fees from you for direct tax coaching, indirect tax coaching, right? Online recorded classes, super simple classes, not creating a hype like giving 8 books to you and then 300 hours of lectures, not so much of hype. Simple, to the point, we are covering everything and giving coaching to you. I am receiving fees from you in India. I am also working in India, so accrued in India. So receipt and accrual both are in India, so it is Indian income. Suppose example, I am giving coaching to ACCA students in UK, right? So basically I am working from India, so income is accrued in India, but the fees is paid to my UK bank account, so received outside India. So this is also Indian income. Why Indian income? Because accrued in India, maybe received outside India, no problem. Sometimes what happens, I went to America to Harvard University to give a lecture on Indian value systems. They are really great. The world can really become a better place to live in with it. So I gave lecture there. So they transferred the money to my Indian bank account. So accrued in USA because I gave lecture there, but received in India. So it is also Indian income. But if suppose received and accrued both outside India, foreign income. Received and accrued both outside India, foreign income. Okay, this you should be very clear about. Now income may be received in cash or in kind, right? Suppose example, you pay me fees in cash through bank account, also cash, right? Then it is yeah, it is received in cash. But some student, what happened, that he cleared CMA, he was so happy that he gave me a gift as car. Sir, आपके लिए Rolls Royce car gift, चलो ले लो. So this is what? This is gift in kind, income in kind. So this is also taxable. So whether the income is in cash or kind doesn't matter, it is taxable. Okay. And when we talk about receipt, receipt should be first receipt. Now I received the fees for ACCA classes in UK bank account. Now first receipt is in UK, right? Later on if I transfer to India, doesn't mean that received in India. So when we check about receipt, it should be first receipt which should be checked. Okay, first where it is received. Now accrued means earned, where you worked, where you put the efforts, where you signed the agreement, right? All that is accrued, right? Now very important section, the law did not just leave you by saying that if you either receive in India or accrue in India, it is Indian income. Wherever there is a doubt, conflict, government said let us introduce two more words: deemed to accrue in India, deemed to receive in India, right? So first start with deemed to receive in India, section 7. Suppose if it is actually received in India, then no need to talk about section 7, correct? But if it is received outside India, then only section 7 will say that it is deemed to receive in India in particular situations. What are the situations? Like example, some employee worked in India and he was registered under the Provident Fund, recognized Provident Fund. Now he retired, so he is staying outside India. Now he received the money from Provident. Okay, I'll tell you in a proper way. One more example I'll give. Suppose some people are there who are government employees working outside India. Now they will receive salary from government of India. So in this situation, what happens is they are working outside India, they are receiving money outside India. So actually it looks that income is outside India, foreign income. But any recognized provident fund which is more than 12% or any interest on such provident fund which is more than 9.5%, even though received outside India, is treated as deemed to be received in India, because you are receiving the payment because of the Indian laws, right? Employees Provident Fund and Miscellaneous Provisions Act 1952. So as per the Indian laws you are receiving, right? So that's why it is deemed to receive in India. So these specific cases it is deemed to receive in India. So what is the first case? Recognized Provident Fund in excess of 12% and interest on in it in excess of 9.5%. Second point, if suppose you are actually receiving from the employer contribution towards notified pension scheme, or maybe Atal Pension Yojana, or maybe central government health scheme, these are all mentioned under section 80 CCD. So if you are receiving something from the employer in these three schemes like Atal Pension Yojana, Central Government Health Scheme, Notified Pension Scheme NPS, then whatever you receive from the employer on behalf of employer, that is Indian income, even though it may be outside India. You may be working outside India. Third point, if suppose any amount is transferred from unrecognized provident fund to a recognized provident fund, from unrecognized provident fund to a recognized provident fund, it is deemed to be received in India, right? And if you are earning deemed profits are under section 41 of the profits and gains of business and profession chapter, or section 59 of income from other sources chapter. So any such deemed profits are there, they are taxed in India. right, as per that sections. We'll discuss when that chapter comes. Okay, as of now, simply remember deemed profits under section 41 and 59. Okay, and any income from undisclosed sources, right? If any income is there, you earned, when you earned, God knows, but when CBI raided your premises, income tax department raided your premises, they got lot of cash, right? So in that case, government will say it is income which is from undisclosed sources. It is deemed to be received in India. Now you may have got that money from Pakistan or you would have got it from China, doesn't matter. It is deemed to be received in India. That's why many movies become super hit, right? They have earned 8,000 crores, something like that they talk about. How it comes? Theaters are vacant, but movie is earning. Why? Because some money should be routed to India. And if it is found by our government authorities, then they will not be able to disclose the source, right? They cannot say that it is from China or Pakistan. So it is income from undisclosed sources and it is taxable in India at the rate 60% tax rate and 25% surcharge, right? Huge tax, and that is deemed to receive in India. That becomes Indian income as per section 7. So what are the 5 things I said, right? Recognized provident fund more than 12%, interest on it more than 9.5%, unrecognized provident fund money transferred to recognized provident fund, any Atal pension yojana, or you can remember that central government health scheme or notified pension scheme under 80CCD, right, contributed by the employer in all the 3 cases which I discussed till now. Fourth one is deemed profit, fifth one is income from undisclosed sources. All these, even if it is not received in India, even if we don't know where it is received, if this situation comes, it is deemed to be received in India under section 7. Now come to section 9, deemed to accrue in India. Now what happens? There is a dispute that where you earned this income, whether it is outside India or India. To put an end, government said we deem that you accrued it in India. So what are that? Section 9 subsection 1 clause 1 2 3 4 5 6 7. So let's start with the first few. Hey, if you are earning something outside India, you earn something outside India. Now you will say it is foreign income, sir. But government says, is it because of business connection in India? Hey, asset is there in India, right? Source of income may be there in India. Maybe property is in India. Maybe you transferred a capital asset in India. If you are earning any income outside India because of the business connection in India or because of the property or asset or source of income out in India, or maybe because of transfer of capital asset in India, then there is a connection, India connection established, correct? So it is deemed to accrue in India. So that becomes Indian income. Even though you may say it is foreign income, it is Indian income for income tax purpose. Sometimes you receive salary outside India, but for the work you did in India, for services rendered in India, right? Many companies like McKinsey is there, BCG is there. They send their consultants to India for working. They do lot of research here, they do lot of studies here, right? So in that case they rendered services in India, right? For that, if they receive salary outside India, it is deemed to accrue or arise in India. Sometimes what happens, Indian embassy people, government employees work outside India, right? They work outside India, they receive salary from government of India. That is deemed to accrue or arise in India under section 9. And suppose you receive dividend from an Indian company. Suppose there are some NRIs, they are staying outside India, but they invest in Reliance shares, Tata shares, Adani shares especially. Because everybody knows that Adani has strong businesses and it's really superb. Now whatever propaganda may happen, but they are genuine business, they are businesses with cash flows, they are businesses with profits. So if people invest in such company shares, they are getting dividends outside India. So Indian company paying dividend outside India, it may be there, but it is Indian income. It is Indian income. That's it. Okay. Now come to further points which we have to discuss. Royalty, interest, fees for technical services. Remember these three words. What I said: royalty, interest, fees for technical services. These, if they are paid in India, it is obviously Indian income. Why will we talk? No need to talk about. But if they are paid outside India, then only we should talk. Correct? If suppose somebody is already in your control, why will you try to control? Right? So if they are paid outside India by the government of India or by any state governments of India, right? Governments may pay royalty. Like I'll tell you, for GST, we are taking lot of services. Government is taking lot of services from Microsoft company. So in that case, what happens? Government will pay royalty license fees to Microsoft. That is deemed to accrue. That payment, whatever is there for Microsoft, it is Indian income deemed to accrue or arise in India. So if government is taking loan out from outside India, government pays interest outside India, it is Indian income for the receiver. So basically any royalty, fees for technical services or interest on loan paid outside India by government of India, okay, for the receiver it is Indian income because it is accrued or out deemed to accrue, even though actually deemed to accrue or arise in India, actually received outside India, right? Even though agreement may be signed outside India, but as per Indian income tax, it is deemed to accrue or arise in India, right? So it is Indian income, they have to pay tax. Now come to second point. If suppose the payment is not done by government but paid by the resident, then what to do? Indian residents are paying outside India. Indian resident means it may be Reliance Industries, it may be Adani Enterprises, it may be Mr. Ganesh, right? So if we are paying outside India, it is Indian income, right? It is Indian income. If I am paying interest outside India for the loan taken, I am paying royalty outside India for any uh, rights which I have taken, I may be paying fees for technical services outside India, but all of them are deemed to accrue or arise in India, right? Now, but suppose if as a resident I am paying, but why I am paying? Because I want some usage for business which I am doing outside India, or profession which I am doing outside India, or maybe any source of income which is outside India. Now I am a resident, I am paying outside India for business profession source outside India, then is it deemed to accrue or arise in India? Now देखो, usage is also outside India and payment also outside, it is not deemed to accrue or arise in India. If it is used in India, then definitely deemed to accrue or arise in India. Simply remember, resident pays, generally it is deemed to accrue or arise in India. But if it is for business profession source of income outside India, then it is not deemed to accrue or arise outside, arise in India. Okay. Come to non-resident. Who is non-resident? Generally, if non-resident is paying any interest, any royalty, any fees for technical services, it is not deemed to accrue or arise in India. Array is non-resident, yaar. So it is generally not deemed to accrue or arise in India. Laws should be fair, correct? So generally not deemed to accrue or arise in India. But if it is interest on the loan taken outside India, interest paid for the loan taken outside India for business or profession in India. Now, who is taking loan? Non-resident. Where he is paying interest? Outside India. For what purpose? Business profession in India. Then the interest also becomes an Indian income. Suppose example, Citibank is there, or suppose it's American bank in America only, right? They are collecting interest. For them also it is Indian income. Okay, because business is in India. Simple. So I only spoke about interest till now. Okay, and in interest I only spoke about business and profession. Please remember. Now I am talking about non-resident paying royalty, paying fees for technical services. These two. Who is paying? Non-resident is paying. What? Royalty or fees for technical service. Where? Outside India. Generally it is not deemed to accrue or arise in India. But if it is for business in India, if it is for profession in India, if it is for source of income in India, then it is deemed to accrue or arise in India. Simple? Very good. Hey, resident and non-resident exactly ulta, right? Resident generally deemed to accrue, non-resident generally not deemed to accrue. Resident if business is outside India, profession is outside India, source of income is outside India, then do not accrue in India, right? Exceptional situation. Non-resident in exceptional situation like interest on loan is paid outside India for business and professional in India, then it is deemed to accrue or arise in India. Royalty fees for technical services paid outside India for business, profession, source of income outside India, then it is deemed to accrue or arise in India. This way we should learn the concepts. Now we started with deemed to accrue or arise in India under section 9 with business connection, right? So let us understand business connection in detail. Now suppose if there is a non-resident and he has agent in India. Now agent is concluding contracts for the non-resident, or maybe non-resident has land in India which agent is helping to get the tenants, or non-resident is giving some services but this agent is helping to get the clients in India for such services. So in this case the non-resident, the business connection is established in India. Okay, so business connection is established if non-resident has an agent who is wholly procuring contracts or mostly concluding contracts or playing a significant role in concluding contracts, for renting properties for non-resident, for getting clients for services for non-resident, right? In this case business connection is established. Or if the agent is maintaining stock for the non-resident and delivering whenever required, or procuring contracts, securing orders for the non-resident, then we can say that business connection is established. Now what happens? Suppose the agent's name is A and the non-resident is X, right? Same example which is there on the screen I am giving, right? In this case, if agent is A is collecting or entering into any contracts on behalf of X, then directly business connection is established. But suppose if A is concluding for another non-resident, that is Y, then is business connection established? The answer is generally no, but if Y is controlled by X, or X is controlled by Y, or X and Y both are controlled by Z, in that case even if A concludes contracts for Y, business connection is established. Okay. Now, suppose if the agent is independent, non-resident requires somebody to enter into contracts. He approached one independent agent, maybe general commission agent, a broker, and he entered into contract for the non-resident. Now, this agent does the same for many people. In this case, business connection is not established, right? But if the agent is the employee of non-resident, if the agent is wholly concluding contracts only for that non-resident, then we can remember that business connection is established. Please remember that if suppose you are shown advertisements, like you see lot of advertisements on YouTube, correct? So you are shown advertisements, showing of advertisements to the customers in India, or people who are using internet protocol address in India, right? This is explanation 2a. So advertisements are shown to customers in India or people using internet protocol address in India, or suppose any data is collected from residents of India or people using internet protocol address in India, or any goods are sold or services are rendered to residents in India or people using internet protocol address in India, then we should remember that there is business connection. Arey yaar, you see lot of advertisements, like you can say that they will be giving lot of advertisements that you can do Instagram ads, you can do YouTube ads to grow your business, right? Or they show lot of advertisements that you can buy products on Amazon. You can see lot of advertisements that tries to sell products by an American company. So obviously the first point, showing of advertisements, establishes business connection. They are collecting data, like some survey monkeys there, they collect lot of data, or by installing cookies in your phone or laptop they are collecting data, or last thing I said, they are selling some goods. Business connection established as per explanation 2a. There is one more concept called a significant economic presence. It simply says that some transactions done by a non-resident or entities outside India with people in India. The transaction may be selling goods, may be selling services, may be selling some property, may be downloading of data, like there are so many softwares, right, which are made by foreigners or American companies or UK companies or German based companies, right? And people in India download it, for that they pay. If it happens the transaction value is going above 2 crores, then that entity outside India has significant economic presence in India. Second point, like lot of continuous interactions happen, like Facebook is there, lot of interactions happen amongst the users on the platform. So if there is a continuous interaction with Indian customers and the users is more than 3 lakhs, like example PUBG game is there, lot of interaction, Facebook is there, Instagram is there, then in that case if the user base increases above 3 lakhs, significant economic presence is there. Now companies will say, sir, we don't have any agreement. Okay, no problem. We don't have any residents. Okay, no problem. In India, no problem. If you don't have residence in India, you don't have business place in India, you're not rendering services in India, you're not entering into contracts in India, still significant economic presence is there. And because of this significant economic presence, you earn any income in India, the income is deemed to accrue or arise in India. That you have to remember. Okay. Now antivirus softwares are there, na, download of data means. Okay, chalo yaar. Last thing, if suppose you are simply purchasing the goods with an intention to export, or there are many news agencies like Bada Bakwas channel is there, right? They collect lot of news and views in India, right? And sometimes what happens, many people come to India for moving, shooting and all, like Ramoji Film City and all, but the directors, partners, all should be non-resident, or sometimes they display uncut, unassorted diamonds in India. In these four cases, business connection is not established. Simply you are purchasing goods to export, you are coming to collect news and views, or third one, you are shooting movie but the directors and partners all are non-resident, and finally you are displaying unassorted, uncut diamonds in India. These all cases, business connection not established. Okay, and finally, last topic for our discussion, deemed gift. Suppose example, a resident is there transferring cash to outside India, right? Saying that we are giving gift. So resident giving cash gift to a non-resident. In this case, if the value of money is more than 50,000 Indian rupee, right, it is deemed gift and taxable under section 56, right, income from other sources chapter. Okay, subsection 2 clause 10. So what you should remember, who is giving the gift? Resident. To whom? Non-resident. What gift? Cash gift. What is the money value? More than 50,000. Okay, is it taxable? Yes, it is taxable. Under which section? 56 subsection 2 clause 10. Okay, with this we completed entirely the the residential status revision. Hope you enjoyed it. Share with everybody because lot of efforts we have put in, right? And download the notes given in the description. And finally, yeah, do share this video with everybody. Subscribe the channel, like the video, and do comment below. I'll feel happy for it. Thank you so much.